Hi everyone and welcome to our market update for March 2016. I'm Aaron Upcroft. I'm here with Rob Gilmour. Rob, tell us about the RBA decision today.
Good afternoon, Aaron. Well, look, much like previous months, the RBA has left rates on hold at 2%. Though I will say the door has definitely been left ajar for further cuts to rates in the months ahead.
Okay. Not too surprising, but what's the drivers in relation to leaving the door open for cuts?
Yeah, look, a big part of it is the volatility in financial markets overseas that we've seen since the beginning of the year. And the RBA will be watching pretty closely as to whether that translates to actual lower growth. They're also obviously looking quite closely at things here in Australia and generally confidence in how that plays out in terms of the data. So it's still wait and see, but they're certainly ready to act, particularly while inflation's quite low, and they've got a couple of bullets in the gun to do that.
Yeah, okay. And we mentioned confidence last month as well, because I think it is a big factor. There's also a lot of tax uncertainty and confidence that relates to the budget that's coming up. Have you got any comments about that, and what are your thoughts?
Yeah, look, it's been a lot in the press about this, and I think to a large extent the government's lost control of the debate. I think there's a bit of frustration that there's no clear plan and things have been ruled out. There's a lot of talk about negative gearing. Obviously the Labor Party has come out and said that they're going to look at negative gearing. That will have huge implications on the property market.
Huge effect.
So without a rise in the GST, which is what the government has said that they're not going to do, they're now going to have to look for savings elsewhere, or how are they going to adjust the tax mix. So a lot of uncertainty. That's not good for business. Consumer confidence is ticking down. You're seeing that compounded by what's going on overseas. So things at the moment are a very interesting time for Australia.
Yeah, and that negative gearing, I mean, it's going to have an effect on, obviously, investment purchases or investment lending in general. We're still seeing lending standards that are being tightened in relation to the investment lending. It's happening more. Obviously, there's still strong, well, not obviously, but there is still strong competition for the owner-occupied market. It's going really well. There's still cuts that are going on there. So there's a lot of competition still around for those owner-occupied loans.
Yeah. I mean, look, what I'm seeing on the flip side of that is that there's more competition for deposits.
Yeah, right.
And actually, we're seeing deposit rates slightly tick up, which we haven't seen in a while. And what that basically is the banks trying to shore up their funding base to get increased deposits into their banks rather than relying on overseas funding. So, yeah, some pretty interesting things going on there.
Okay. Well, that's our market update for March 2016. We'll see you again next month.